There is a reason that I am introducing you to the elements in this trading basics unit. Even if you never use some of the things that you are being exposed to, you will see and hear just about every single one of these lessons at some point in your trading journey. I want you to know what is out there, not be lost when you hear or see people referring to these things that I'm showing you. I want you to have, at the very least, a rough idea of how and what they are and how they work. And just maybe you'll find something that you really love or really resonate with and build a strategy or find a strategy built around that element. Here, we are going to explore in a very general sense about indicators. Now, listen. You will absolutely find snobbery and elitism in the trading community. This usually comes from people who are out there selling, products, or selling their group, or selling their signals, or at the very least, they're out there ego teaching. And so they poo-poo any trading style that isn't like theirs as if it's less than. But you know who you will never hear making disparaging marks? You will never hear mature, seasoned, consistently profitable traders making any kind of disparaging comments or remarks about anybody else's trading style. They are too busy making their own trades, secure in their own style, and most of them have already been humbled by the market to the point that they aren't even thinking that their way is the only way or that their way is better than any other anymore. So just keep that in mind if you run into, if you like indicators and you run into a little bit of people talking that it's less than or not as good as, just pure price action. We're not falling for that. With that said, there is definitely, some elitism surrounding what is referred to as price action trading versus indicator trading. Indicator trading can really be looked down upon, but I 100% right now want to encourage you to never let that get in your head. That is such crap and is so freaking short-sighted. There is not one way to trade. And the only right way to trade is the way that you are successful at, and that in the end makes you money. Because that's ultimately why each and every one of us are drawn to the markets and are here. And indicators, just like any other tool that you employ in trading the Forex market, has the potential to bring you great success if you put it with the right confluences and practice great trade management. I will say here that I am not currently trading with indicators at the moment, at the time of recording this course. But one of my family members right now currently trades full-time with indicators with a strategy that I taught him, and that he then over time and placing trades over and over and over, he tweaked and made it work better for him. And it's highly profitable and he loves it. Indicator trading is something that a lot of people love because a good indicator strategy just takes the guesswork and all of the emotions out of trading. There are hard rules. It is either a heck yes or a no. Stay out of the trade. It is plain and simple, black and white. The entry and exit is plotted for you, and for a lot of people that can go a long ways with helping their trading psychology. I spent almost a whole year just studying indicator trading and all of the different mathematical approaches to the data and the ways that they are coded, and most importantly, how you can put indicators together to get great profit out of the market. So let me share with you the secret sauce of mine when it comes to indicators. Indicators are used by Forex traders to gain insight and clarity into what has already happened, what is currently happening, and sometimes with certain indicators to help forecast into the future of what might happen with a currency pair. Trading indicators are essentially a tool that is applied to a trading chart that takes a specific mathematical approach to interpreting information off of that currency pair. Indicators derive this information from either price, volume, or repetitive patterns that occur within the market. And then the indicator visually represents them for the trader in the form of, a line, a graph, a chart, or just information. Indicators are usually used as an overlay onto the candlesticks of a live chart, or they will have their own, dedicated window space like you see here, above or below the candlesticks, or so they can be a simple, like I said before, information line that may just be listed right at the top of your trading screen. There are several groupings that indicators are put into, and I want to touch on a few of them. First, we have visual presentation. There are more, but there are three main ways that you will see indicators visually displaying data. The first one, most popular, moving averages, which are sometimes used as an overlay on the main candlesticks, kind of like you see right here. You have the candlesticks going, and these lines that you see going over it, those are those lines, that red, that blue, and that green line, those are called moving averages. And if you ever see those are just an overlay that is a mathematical average that is put on top of candlesticks, or sometimes it can, be in its own window. As we see here, this one also has a moving average, these lines right here, that it goes along with this oscillator. But the moving averages, again, are just used as an overlay onto main candlesticks. We do have, as I just mentioned, oscillators. Oscillators usually have a zero line, and this line right here in the middle that's splitting these blue parts of the histogram and the pink parts of the histogram, that is a zero line. So oscillators usually have a zero line, and you'll see data presented showing you that if the signal is, above the zero line, you're going to take a long, and if the price action is below the zero line, you'll be looking for shorts. And then we also have that we see commonly histograms. Histograms usually organize data points. Popularly, you will see strength, volume, and momentum shown in histogram form, but it really can be any type of data. But these data points, this data is compiled in such a way to visually show you how to possibly interpret the present market gauge, and to be able to get more information about your trade bias and a possible entry. With the different indicators, every single indicator is going to be read and used differently. So while I said for this oscillator, most of them have this zero line, and if the histogram, part is above, this one also has a moving average, which are these, lines right here. And so it has both. So it's got several different equations dealing with, interpreting the data. But most indicators, like I said, that are oscillators will have, if it's above, you're long, and if it's below, you're short. But occasionally you will come across some that are different. And in that case, you need to always make sure you read the instructions or read documentation that come with your indicators. One, you'll find them, interesting, but two, you may find that the indicator isn't quite used like you think. Moving averages are just the same as what I just showed you with the oscillator, where pretty much if price action is above the different moving averages, you're going long, and if it's underneath, you're going short. And that can change. Different rules can come in saying, that if price closes between, certain moving averages, that it can be an invalid trade, or that it can make it validated. People have a lot of different rules around moving averages and what makes them find the most profitable, entries. However, just looking at moving averages, you're going to see so many, of those. And so the moving averages, oscillators, and histograms are the most common visual representations you're going to see. You have two types of indicators, and leading indicators, they attempt to predict where price is headed. And then you have lagging indicators, which are what most indicators are. And lagging indicators offer a historical visual at what has already happened or what is happening now. But listen, this is important. You need to beware of repainting indicators. And you may want to put this in your notes. Repainting indicators, research an indicator before you trade with it. These indicators look a certain way when price is live, but they change as candles close in the present time and in the future. So these changing indicators are called repainting indicators, and indicators can be repainting whether they are leading or lagging. So if an indicator looks too perfect, that's probably because it may really be a repainting indicator. And in that case, of course, it's perfect. Everyone is a genius in the markets when you're looking in hindsight. And when they repaint, again, the indicators interpreting data at a certain point. And so it may look like price is going up or going down, but if the indicator is incorrect at that point that you're placing the trades, you may look a day later or 3 hours later or whatever period of time you're looking at, and the indicator may show a different indication than you saw when you were live 3 hours ago or the day before. So repainting indicators do change, and you want to be aware that a lot of indicators are that, and you don't want to get sucked into placing trades on an indicator that repaints. Now, indicators do also tend to fit into 5 categories. There are more, and not all of them fit into these, but there are 5 common and general categories. First, you have the trend following, and indicators that are trend following, what they do is they measure the direction and the strength of trends in the chosen time frame. You have mean reversion indicators, and those indicators look at the pair's historical average, and it looks for price to return to that average in the future. And so it's telling you how far off of this average that price is right now, or the average that it's looking for it to return to. You have relative strength indicator, which measures speed and velocity of price change in a pair and looks at it in regards to sometimes being overbought or oversold. You have volume indicators, and volume indicator looks at buying versus selling pressure of a currency pair to determine which side is currently in control of the present price action. And lastly, you have momentum indicators. They generally measure the amount that price has changed over a given period of time. There can be thousands of each type of these indicators, and they could each have a different way of interpreting data using various mathematical approaches. Here is my secret sauce of building a profitable trading strategy using indicators. But as there is nothing new under the sun, I absolutely cannot take credit for stacking indicators, as I am totally not the first one to do it. I actually first discovered the concept of combining indicators in really unique ways when I was already fascinated in studying the different approaches to compiling and presenting chart data through indicators. And then I decided to study further into the Eastern ways of interacting with the market, since that's where a lot of what we have modernized today originated from. And just a side note, like candlesticks themselves were developed back in the 18th century by a rice trader, and many other methods developed from that region of traders, and they have withstood the test of time. So at this point, I was hooked. And anyway, I discovered, I think the first one I ever looked at was the Ichimoku indicator, and it has like 7 different moving parts and several different ways of combining data to come up with confluences for a high probability trade entry. Hence, the never use just one indicator rule was born and live and die by for me. Since discovering and studying the Ichimoku, I found several people that were actual real live traders, not just marketers, and some who were both traders and mathematicians who were also actually professionally trading, like institutionally trading using indicators. And so because of that, it made me look further into how they were stacking and using indicators for their trading strategy. And I'll have some links to some of these resources in the resource section of this course, because I came across some people that still teach now, and I highly recommend, if it's something you're really interested in, it's one more resource for you, and I'm happy to share. So that'll be in the resource section. So here is my guideline of what I require in an indicator trading strategy. The first thing that you have to have is an indicator establishing what your trade bias is, or what your baseline is. And what that does is it determines, are you looking for buys or are you looking for sells? And for me, one of the sweet spots is if, say, your trading time frame is on the 1 hour or 4 hour, that a lot of times your bias being on the next highest time frame, is using multi-time frame analysis, and just really adds, a whole lot more probability of filtering out trades that aren't as high win rate necessarily, and, then gets you into looking for either buys or sells when that tends to be where price is actually moving, because you have a lot more of market noise on lower time frames. And so you look for your very first indicator, like I said, showing you your trade bias. Next, I am always looking for and have in place my entry indicator. Now, this one is very important because this is the signal that, hey, you have a possibly valid entry right here. And what makes it valid or invalid is if the other parts of the strategy all agree. So I usually look for 2 confirmations, and those are usually 2 different indicators. So I look for confirmation 1 and confirmation 2, and these give agreement or confluence not only to the baseline, but to the entry. And so far we have a baseline, an entry indicator, confirmation 1 and confirmation 2, and all 4 of these should be saying the same thing, that once my entry comes in and it says, hey, you have a valid entry right here, all of those have to be agreeing. As well as I look for a volume indicator, and there was a trader that actually, I had not thought of putting a volume indicator into my trading toolbox, but it is really, really valuable. And so some type of indicator that either measures volume or volatility, strength of the market for movement, some type of volume indicator, all of my indicator strategies, or, if I'm working with anybody that's creating that, I recommend that you put that in there. So for me, a volume indicator, and then absolutely an exit indicator. And this signals at what time to close or exit your trade. The only thing is that maybe some of these could be the same indicator. If you are trading by moving averages or the MACD or some other oscillator or, RSI or something in there, you could have a moving average added to that, and you could say use one indicator for your exit, and the same indicator could be your entry. So you could find an indicator that is just really, really good at calling when to enter and when to exit. And so you're really just looking for your two confirmations. You're looking for your trade bias to agree, you know, if you're going for buys or sells, and then you're looking for when the market has enough volume to carry that push or that impulse move that you're hopefully entering in on. And so when I am stacking indicators, when I'm building a strategy, those are the pieces that I'm looking for. Now, there are other tools that you can put in. You know, you can add in fundamentals, you can add in all kind of different market statistics, market, you know, heat indexes. There's all kind of things that you can put in, and for sure put in all of the stuff I've already told you about, the stuff I'm about to share with you. Pile it all in and find a strategy that makes you profitable, because that's the strategy that works, and that's the strategy that you want to go for building. Let's take a peek at indicators on a chart. Again, I am in TradingView, and so I'm showing you where to find indicators and how to add indicators onto your TradingView chart. And so to find your indicators, you're going to come up here to indicators, and you're going to click that. And there's a couple of ways you can come in. You can have favorites. You see I have some that are favorited here. You can have scripts that you've written. You can have technicals, and those are indicators that TradingView themselves have grouped together. You have different strategies, volume profiles, different candlestick patterns that'll give you indications of that, and you can kind of scroll through some of the more popular ones that are on here, although remember I've warned you about those popular ones. And you've got different indicators that deal with different parts of financial. You've got community scripts where you can look at different what's trending, what's top, editors pick, you know, because there's such a strong community of indicators through TradingView. But you could come in, and you can also just do a search if you happen to know the name of an indicator that you're looking for. And we're going to look for an EMA. And right now I want several EMAs. I want a moving average ribbon. And so what I'm going to do is click on this moving average ribbon, and it immediately puts it on my chart. So now you see that there's a moving average on my chart, and where that is, anytime it's overlaid over the candlesticks in your main window, you're gonna find that information right here at the top, okay? And you can hide it by, you know, clicking on the eye right here. You've got settings. You can look at the source code of that, or you can close it down, remove it, or you can have some different, you know, options. You can add different things to it, and you know, right there with the three dots. But right here with the gearbox, on this particular indicator, it gives you any of the customization options that indicator offers. This particular indicator does not let you change the period, the average that it's going for. It is set at a 20, which is the fastest line, the shortest period. So that's this red line right here that's going to react the fastest. You have got the 50, which is this orange line right here, and it's going to react the second fastest. You've got the teal line, which is your 100, and that's the line you see here. And you've got the blue line, which is the 200 that you're going to see right here. And if you wanted to change any of those colors or line thicknesses, you absolutely could. You can just change it here. You can, you know, change how it looks, change how it acts. You can make them lighter, darker, you know, whatever works for you, because a lot of times certain trades, certain colors, you know, will stand out too much. I always focus on de-emphasizing parts of a strategy or parts of an indicator that I'm not using. So I will very often, matter of fact, I would almost say I never use an indicator as it comes right out of the box ever. So take that and do what you will with it. I'm just saying I don't ever, or it's very rare that I would use the settings of any indicator that comes right out of the box. Now, it also lets you put labels on the price scale. And so if you'll look over here, it tells you at which point on the price scale at that very moment where price is trading, where those different levels are. And you can have values up here shown in the status line on and off. I always leave that on. I like to see it. So we saw that we can customize that one a little bit. Let's add another indicator because we stack indicators here, and we're going to add the Rex, and it is a really cool, I've used it in a couple of strategies. And to come in and let's just customize it, we are using the moving average type. It gives you an option of an EMA, a SMA. It gives you the option of the Tinkin, and it also gives you the option of the triple exponential moving average. And you can see how the line was reacting to each one that I was selecting. I'm going to leave it on the simple moving average, but I'm going to change the smoothing length to 21. I'm going to leave the signal type, or we'll take the signal type to an EMA, and then I'm also going to change the signal smoothing length also to 21. And so we've customized that. And again, if you come up here, you could take and also change the color if you wanted it to be, you know, a different color, or if you wanted it to be de-emphasized. And if you wanted to emphasize, this is actually the signal line. It's the one that's telling you, you know, if you're going for buys or sells, and if you're wanting that really thick and bright zero line, because that zero line with this particular indicator is anything above it, you're going for buys, and below you're going for sells, and the signal line is that golden line there. And so now we have two indicators. And so if all we had was these two indicators and that was all we were using, anytime we looked for an entry, we would want them both to agree. Most of the time with the moving averages, you know, again, price candlesticks are up, or prices trading above the average, you're looking for buys. Prices below the average, you're looking for sells. Right here, just in this one example, if you just look right here where price dropped below all of the moving averages, and you look down here where we're on the Rex indicator, you see right here price at the same point dropped below. And so that possibly, depending on your trading strategy, could have been a you know, a valid entry. For me, it wouldn't be, because I'm still looking for confluences. I'm still looking for other indicators, so that wouldn't necessarily be a complete strategy for me. However, let's add a few more on there. Let's add us a nice histogram. We'll add the absolute strength. That's one I've used in the past. And we will also use, let's just add the RSI histogram also. And so now we have 4 different indicators on one chart, and you see that they've got their own windows, and you can make the windows smaller or larger. You could zoom in if you're needing to see that something is happening, you know. But what happens is you get to where you just look at these really, really easily. You can, for any one of them, customize the colors, customize what you're seeing. You know, if you're not really wanting to see the moving average part of the absolute strength indicator, you can take that plot off. You can put that plot on and take away the histogram if all you're wanting to see is the cross, and at the cross you enter to whichever color is dominant at that point. So you've got a lot of, you know, customization of color wise and different things that you can do with that one. And the same thing with the RSI here. You have different inputs, the lengths that you can change, the moving average length, we can take it to 21, and you see it absolutely changed when we did that. And I'm going to change it to the open, high, low, close times 4. This right here has the moving average type of I'm going to change it to the SMA. And you can take and you know, again, change anything that fits your trading strategy, your time frame, how you trade. But let's just see if we get a valid entry, if everything is in agreement here. If we look right here on the moving average and we see price dropped down out of the moving average right here. So price dropped down, you know, again, is that a candlestick confirmation? Are we looking for break of structure? Are we looking for golden zones? Are we adding anything else in, or are we just trading indicators? For right now, we're just in our plan just putting things together as a possible entry indicator being when price is trading below all of the ribbons. I actually also like the ribbons fanned out, and I'll go into that a little bit more on my moving averages section. But we have price, you know, trading below the ribbon, drop below the ribbon. So we have a possible potential entry, and we need to see if everything else agrees. If we come down here to our Rex, we absolutely see that yes, price is right now on the 0 line, and you have the moving average portion of this already underneath the line. Now, I personally, when I'm trading with indicators, I want absolute yeses or no's, so it would not be a valid entry to me until about right here when the signal line actually drops below. But for some reason, for some people, just when it's touching, that would be a valid entry. I would be waiting for price to fall below, so my entry would be somewhere right in right here. Now, if you take then and say, okay, so I didn't have a valid entry yet right here where price just dropped below. You know, again, did I, didn't I? That's left up to interpretation. You have to place your own rules. I want everything below, so I'm going to say my entry was here. Now, if you come down further to the absolute strength, what do we see? Well, we see right now is it's not a valid entry here because you have the green average here that's on top, and the histogram portion is very, very gray, small, showing no strength in the market. So I'm not having a confirmed entry yet until I start to see the red line cross over the green, and I'm starting to see some volume. So right about here is where I'm going to have a valid entry. So do you see what happened? Like, I had a possible entry point here. I had two confirmation indicators. One of them, again, just with my own experience, just because of how I trade, it would not have been a valid entry here. So I stayed out. I waited till it was a valid entry, and I'm looking for yeses all across the board. I didn't get a yes on this particular indicator until right here. And this one's still, you know, is it at a yes? Well, price traded back up into the ribbons here. So I might not have gotten a yes, you know, after price is moving on until right here also, till price is, you know, dropping below the ribbon again. So right here, I've got where the cross happened. So now I've got a valid entry here. And if I look down here at the RSI histogram, I am seeing that yes, we are good for sells. And so right here where price drops back down below the ribbon again, I would have, if this was my strategy, and I just pulled this one out, you know, if this was my strategy, I would have a valid entry right here. And I, depending on what my rules are, you know, of where I would be putting my stop loss, either above structure, or maybe I have a 50 pip stop loss just as a standard, you know, that I find that works. And if that was my entry, you know, I would have grabbed, because we are on the daily chart right now, you know, but I would have grabbed 1,300 pips, you know, so that would have been a nice trade over. And then where, you know, again, where's your exit? Which one of these indicators is your exit indicator? You might have used the absolute strength as your exit. You might have used your RSI as your exit. You would have used the Rex, as your exit, that soon as price crossed back over this zero line, or soon as price crossed here. And that's what I usually use, is that when price crosses again, I'm looking to possibly close my trade, and then I'll just grab another entry if I need to, and what you're looking for when you're indicator trading, stacking indicators, and you want yeses across the board. And the more you stack, the more confluences, the more things agree, the more that you get used to and can count on your trading strategy, the more confident you will be, and that you will dial that in and become that consistently profitable trader. And it can absolutely be done with indicators. You can use pure price action and indicators, and nobody, trading is such a personalized thing to begin with that again, don't ever let anybody talk about or talk down to the strategy you build, because the bottom line is, do you make money? Are you a profitable trader? Are you consistent? Do you have good trading psychology? And that is what we are building a good solid foundation for right now.